Hi, good morning. You're watching the market right here on ET now, and so much consolidation in the market. It was one of the quietest sessions that we've had in a while now, but a lot of that could actually change because it seems that there is some breakthrough when it comes to US and China and their tariff talks that transpired in London over day two. So here's what happened overnight, and you've got US equities which have managed to rally on signs of some progress coming in the trade talks between US and Chinese officials. You've got the S&P 500 index after making it to that all-time high of 6,000. It's added another 0.5%. NASDAQ holding up 0.6%. And the Russell 2000 as well managed to eke out gains of about almost 6,000 or so for itself. The U.S. Commerce Secretary Lutnick has said that talks with China are going really, really well. In typical Trump style is how he's described the negotiations with China on trade. And Secretary Bessent said that he has to go back to Washington, D.C. to testify before Congress now. Bessent, remember, was sent back to Washington for a scheduled congressional testimony, leaving Jameson Greer and Commerce Secretary Lutnick to continue the talks with the Chinese negotiators. So that's pretty much it, and it seems that US and Mexico now are set to be close to a deal that would remove Trump's 50% tariffs on steel imports up to a certain volume. So lot of key takeaways coming in there. In fact, you've got the US 10-year yield, which is unchanged now at 4.47%. The dollar index is near about those 100 levels, and Brent oil has softened just that tad bit. In fact, let's hear out to what U.S. Secretary of Commerce Howard Lutnick had to say post the preliminary deal with China.
I think both sides had extra impetus in order to get things done because we both have our presidents behind us, pushing us to make sure we take care of our respective sides.
In the past 2 days, the Chinese and the U.S. teams have had in-depth exchanges. Our communication is very professional, rational, in-depth, and candid. In principle, both sides agreed on implementing the consensus reached by the two heads of state on the June 5th in the phone calls and also the Geneva talks.
Well, yes, positive outcome coming in from US-China trade deal of day two, where the move indicated U.S. restrictions on the sale of advanced tech to China in the recent week to be rolled back as Beijing approves the rare earth exports, and that's indeed some respite to not just the auto industry and some of the related industries as well. So that's one of the big global cues that we have been watching. But other than that, in some of the other headlines, it's World Bank which has gone ahead and cut the 2025 global growth outlook to 2.3%. Other than that, we have also all eyes on the US CPI data because that is something that we will be watching in today's trading session. This time, the estimates that are panning out indicates a 2.5% in number, and we will be watching out for that from the month of May. That will be up from a 2.3% jump that we have seen in the month of April. So definitely that is something that we have been watching. From Brent, gold prices, they edge a bit lower. Dollar index is holding steady at that 99 mark, and US 10-year yield did slip below that 4.5% yesterday, now hovering around that 4.4% mark as we speak right now. So these are pretty much the global cues that we will be watching. The key to watch will be the US CPI data, and in the times ahead we also have the FOMC meet. But with this, let's move on, and let's also welcome on board Santosh Rao, Head of Research and Partner at Manhattan Venture Partners, joining us on the show. Hi Santosh, great to be speaking with you. Firstly, help us understand, what do you make of the US-China trade deal of day two, because some negotiations have been made, trade deal has already been made, and it's rare earth exports that has seen a bit of a respite. Give us your sense.
Yeah, I think it's definitely a step forward, but it's definitely not all the way, because it still has to come to the US. Trump has to approve it. President Xi has to approve it. So the framework is good. But we've gone back and forth so many times. So I think no one's rushing yet. They want to see where the final trade deals land. But at this point, it's a step forward. They're talking. U.S. needs rare earth materials. China needs the U.S. technologies, especially the semis. So I don't know what's a fair deal. I mean, Biden had very restrictive sanctions on semiconductors. Is U.S. going to give it up just for rare earth? I think that's the trade-off that needs to be. We need to see what the final outcome of this negotiation is, just to see who's getting what and at what cost.
Santosh, hi, morning. This is Snehi also joining in. Now, what we understand from these talks, prima facie, is that both of these countries have agreed to stick to the Geneva trade consensus so far, wherein US is imposing a 30% tariff, China on the other side a 10% tariff. Earlier, a lower court in the US had overruled these tariffs, but you have an appeals court in Washington yesterday that has said that these tariffs can continue till trade consensus is reached. How long-lasting do you see this tool, and do you believe that this could be the new normal when it comes to tariff rates between US and China?
Well, I don't think so. I think Trump uses tariffs as a punitive instrument. So we don't know where the final one is. Yes, he believes in it. He thinks it's U.S. Needs to level the playing field. It's an unfair playing field right now, and he believes tariffs will even the field. So we don't know yet till it happens. But at this point, the tariffs are still going to be on the table. So at least till the final outcome is decided. So we'll wait and see. But what I'm saying is it's still moving parts. It's moving in the right direction. But let's see what the end game is. Let's see what U.S. gets out of this whole thing. But at this point, like I said, it's still uncertain.
Work in progress, as they say. But Santosh, tell me, what is it that you make of all those recessionary fears? The tariff talks at least are headed in the right direction. At least they're not now sort of, a dead end or locking horns as they were earlier. They seem to be negotiating and, it's progressing well, so to speak. I mean, just last evening, you had the World Bank actually cut the global growth outlook to now 2.3 from the earlier 2.7. What happens to that part?
Yes, I think tariffs in general they're not good. They're not constructive. They slow down things. They have a domino effect. They have a knock-on effect across the economy. So I don't think you want tariffs on unfair tariffs on the table. So the recession is not on the cards. As far as the U.S. is concerned, the economy is still good. Job market is still good. So let's see what the CPI is coming down towards the Fed's target of 2%. Still not there yet, but it's coming there. So let's wait and see. Tomorrow's number is going to be, or the next CPI number is going to be very closely watched. If it's a hot number, then the rate cuts in the next meeting are off the table. But I think if it's a soft number, I think Fed, with the employment number in pretty good shape and costs coming down, their dual mandate is taken care of, so they might cut one rates. I'm in the camp of 2 cuts this year towards the later half of the year. I think we'll get there at one point. At this point, he's just going to be wait and see after tomorrow's data. But then later on, he's definitely going to look at it because Trump is after him also. He wants the rates cuts also. So he believes it's very punitive to the whole economy. So a lot of ifs, ands, and buts. It's wait and see on the part of Fed. But tomorrow's data is going to be very important. The employment numbers, the unemployment claims are going up. Let's see if it stays there. That's also being closely watched. So a lot of things to watch at this point. Let's wait and see.
Indeed, a lot of things to watch. But Santosh, we did touch upon the tariff talks, inflation, and the rate cut expectation. But what about the markets? What is that you are penciling for the U.S. markets? Because of late, for the past 3 to 4 trading sessions, they have been consolidating in a very tight range. Is this indicating a bit of a nervousness in the market, or do you believe this consolidation is healthy before the next leg run up?
Yeah, I think the tech is back. I mean, the Magnificent Seven are back. The so-called Magnificent Seven are essentially back. I think semis are back in play. For a while, it looked like they had run its course, but I think the latest talks from different companies showing that there's tremendous demand for it. AMD also showed that. So that's not an issue of any issue about demand there. The supply is also pretty good at this point in terms of the semis, and the other areas as well are okay. So as long as the consumer holds up and the consumer demand holds up and the enterprise demand holds up, which it looks like it is at this point, the earnings expectations for this year, as of now, looking at the latest estimates, consensus estimates, is about 7 to 9% earnings growth for this year for the EPS, S&P 500 EPS growth. So that's a good number. We came into this year thinking it's low teens, but it's 9 to 10% is also good. It depends on different estimates, but generally I've seen 8 to 10% anywhere between there. So that's a good number, I would say, in terms of earnings growth. So if you can get good earnings growth, companies report fairly. If the tariff talk subsides, then the companies have better visibility into giving guidance for next year. I think that'll be a good thing, and we'll get some clarity and the market will go up. Right now, there's uncertainty. People are holding their cards. They don't know where the tariffs will land and all that stuff. So no recession on the cards, but definitely a slowdown, if anything, if the tariff doesn't take the right shape.
Santosh, before we let you go, while we are talking about the bigger picture here, I have to ask you, where do you think India stands amid all of this? Because even after the front loading that we've seen on from the RBI, you have the World Bank that had still retained its 6.3% GDP target for FY26 in India. This comes after they had slashed it from 6.7% in April. So amid everything that's been going on globally in terms of US, China, where do you think India stands right now?
I think India has been in a good position all along. On a relative basis, it's been very strong, and it continues to be. It's tremendous demand, consumer demand. The government is doing very well. It's telegraphing its intentions very well. I'm glad the war ended and did not disrupt too many things at this point. So I think they need to keep their eye on the prize, which is growth, and move towards increasing their size of the economy. So I think India is doing the right things. They're going to the right place. So I don't see any reason why they should be hurt. And even the trade negotiations, I think India has a good bargaining position there as well. So because Trump needs a deal, and I think India can definitely get what it wants from Trump at this point. So I think the trade deal with the US will be beneficial to both. So net, I see a good tailwind as opposed to headwinds for the Indian economy.
Santosh, great to have you on the show today. Thanks as always for joining in with your insights. Okay, in fact, let's take stock of what the global commentary has been overnight, given all the developments that have happened. And Ankur is waiting by to tell us exactly that. Ankur?
Yes, let's get started with the European Central Bank's Boris Vucic, who has made comments on the interest rates. Remember, ECB has recently cut rates. Now he says ECB is in a very good position on interest rates and ECB can wait for new projections. Apart from that, he also mentioned about the tariff front. He says we'll have more clarity on tariffs till September and can't say if US tariffs is disinflationary or inflationary in nature. Assume that push towards euro area assets will continue and erratic US policies are pushing investors into euro. This is the view coming in from ECB member. Apart from that, Jamie Dimon of JP Morgan is saying maybe in July or September there will be a clear idea on the effect of tariffs. He also mentions that his guess is hopefully not dramatic impact will be there. He also mentions that the effect of tariffs will cause employment to come down, but inflation will go up a little bit. That is the expectation coming in from him. But apart from that, Goldman Sachs is also talking about tariffs and mentions that tariffs will raise goods prices and overall inflation in the coming months. Specific numbers have been given. May CPI data predict a small impact of core inflation rising by 0.05 percentage point, and that could reach at 3.5%, and this will be versus April's 2.8%. He also expects that flat hotel and air prices, airfare prices will be there, with most inflation coming in from goods and services, and that is not in short term. But talking about oil as well, because that is something which has been discussion point, and OPEC Secretary General has said that expect 24% increase in the world's energy needs between now and 2050. And he also mentioned that estimate is in line with the group's 2024 world oil outlook, and oil is expected to be surpassing 120 million barrels a day in that time period, and that is the expectation which is coming in till 2050.
Thanks for taking us through all of those important global comments that we are tracking overnight. But on that note, let's shift focus to our markets back home yesterday, and what a day of consolidation it was. Also, given the fact that it was the Sensex expiry yesterday, a lot of consolidation is what we've seen. Range bound trading day coming in for us, wherein we managed to close absolutely flat on the Nifty around the 25,100 levels, but you had Sensex and Nifty bank that slipped into the red. The broader end of the market held on to very nominal gains yesterday, but on the back of that, mid cap and small cap. So for the mid cap end of the market, a fifth continuous day of gains coming in, albeit it was very nominal yesterday. Similarly, for small cap, it was the seventh consecutive session of gains coming in. But if you take a look at what happened sectorally, it was the entire financials pack that took a little bit of a beating yesterday, because you had Nifty Financial Services, Bank, PSU banks that have closed in the red. Nifty Auto for the most part of the day held on to gains but slipped into the red towards the end of the day. It was the sectors that are seeing some momentum returning, like IT, Pharma, FMCG. They continued to advance for the fifth straight session yesterday. On the flip side, Realty ended its winning streak and was in the red for the second consecutive session, and PSU banks as well, secondary in the red coming in for that. Other than that, we've seen the continuity in FII and DII buying yesterday, so that was looking very healthy yesterday. And FII DII buying, if you see yesterday, FII is buying to the tune of 2,300 odd crore rupees, DII is to 1,100 crore rupees. So at least that momentum of FII buying is sustaining in the market yesterday. Also, lots we were watching yesterday. Amphi data was another key indicator that we were tracking. So that was how our markets have panned out yesterday. But we also have Chandan Taparia, who's joining us on the show, derivatives and technical analyst at Motilal Oswal, and we also have Kunal, who's joining us in our studios. Morning to both Chandan and Kunal. Chandan, we'll come to you first. Given the kind of range-bound trading session we've seen yesterday on the back of that BSE expiry, do you believe that today the markets could once again spruce up, or do you believe that this range that we've seen is here to stay for a little while longer?
Good morning. Thanks for having me. So I believe the market could be in a broader range, but the bias of the index is positive as every small decline is being bought. The reason behind the range-bound bias is that index is holding well above 25,000 marks, but again sustained supply seen is at higher levels. India VIX has gone below 14 marks, so lower VIX could continue to keep the market on the higher side with lesser swing. So I believe the bias could positive, but market will be in broader range. The good part is that it gave the consolidation breakout on the daily chart, but after that the follow-up and the momentum is missing. So buy on decline could continue, and as of now till it holds about 25,000, use any small decline for an upside target towards 25,200 to 25,400 marks. Talking about Bank Nifty, that also got stuck in a range. The major momentum was seen on RBI's policy meet where the rate cut happened. But as of now, till it holds above 56,000, we will continue to be with buy on decline for an upside target towards 57,000. So both the indices are giving the stance for positive to range bound or more of the consolidative move for next couple of days.
Hi, morning. What's it looking like after yesterday's consolidation and today's good handover from the globe, positive talks between China and US? Do you think we'll make a dash up?
Yeah, I think we should be in for I'm not saying a decent day for the markets, but I think at least a decent next couple of weeks for the indices. And my expectation is at least a 500 to 700 point rally on the Nifty in the next 1 to 1.5 odd week. And that too led by a lot of performing sectors like banks. We've seen financials. They've started to look attractive and they've started to show signs of a breakout. We've seen the underperforming sectors, like for example, yesterday the IT stocks, they managed to make a comeback for themselves. Metal stocks largely have been into a range. Real estate stocks have been attractive. So the sector composition has been quite strong. And we've seen that the churn as well as the rotation has been quite evident in terms of the supporting the market moves at every point of time. I strongly believe that over the next couple of days, once the consolidation ends, we should be looking at least another 400 to 500 point uptick on the Nifty over the very near term. So traders should maintain the long bias on the index and try and use this 50-100 point dip which happens on an intraday basis as a zone to try and accumulate or add further.
All right, so the bias remains positive. Let's watch out for that. But let's also get you some of the tradable ideas from both of our experts. And Chandan, give us your stock picks for today.
Yeah, so first trading idea will be buy on HAL, Hindustan Aeronautics Limited. The stock has given a consolidation breakout of last 16-17 trading sessions. Supports are intact. On last trading session, when market remained range bound, this stock managed to hold the gains above 50-100 marks. On weekly chart, the stock is giving for a consolidation breakout. So expecting next leg of rally in the counter with support of 5,000, we can see an upside target towards 5,300 level. Second trading idea, there is buy on emphasis. Nifty IT and Pharma started to witness buying interest. Consolidation breakout is clearly visible in entire sector. And emphasis has given a breakout of last 15 weeks with a decisive hold above 2650 marks. So expecting next leg of rally led by short covering in emphasis. One can buy with support of 2016. This stock has potential to rally towards 2790 to 2800 levels.
So HAL and emphasis looking good to Chandan this morning. But Kunal, what about you? Where are you placing your bets this morning? And given the kind of run-up that we've already seen in financials, would something from that pack make it your list this morning?
Yeah, so I'm betting on large cap names, and one of the stocks is the financials. The first one apparently is Tata Motors, where I would believe after quite some time the stock is showing signs of evidence that it's getting ready for a breakout. About that 3 weeks of very tight range consolidation. So we'd look out for 775 as a target for Tata Motors over the near term. Stop loss could be kept at 715. And Axis Bank apparently has been the other stock which has been showing a classical chart pattern, a bullish flag formation, a breakout above the 1200 mark, a move up from the 50-day moving average, as well as a golden crossover. So multiple positives for the stock in the near term. Would look out for 1270 as a target, recommending a buy with a stop loss at 1210.
Okay, let's take a very quick break. Let's see what the Nifty implied open is indicating. And it's not a big gap up move. In fact, if it softened a little bit from there, because earlier this morning you were holding around the 25,200 print. But at least the positive bias remains for our indexes. We'll take a very quick break. When we come back, we'll have our fundamental experts join in. We'll talk about all the newsmakers as well this morning.
पैसा लगाना है.
First trades, let's take a look at what's happening with the gift Nifty right now. 25,180 thereabouts, so not indicating a very big gap up for us. Like Aisha was mentioning earlier, soft start is what we're expected to see today, but which are going to be the individual newsmakers where the market will be focusing today. Varun is joining us with a list of all of those stocks. Varun, morning.
So, well, let me start with one of traders' favorite stock, and that is Vodafone Idea, because the company has given an update that the company has launched 5G services in Bangalore. Also keep an eye on Wipro, because the company has extended its strategic partnership with Metro AG for 2 years to strengthen the IT operations using AI, cloud and digital services. HCL Tech, one more IT company in focus, because the company has launched cybersecurity solutions with Cisco, and also the company has expanded its partnership with Standard to accelerate the AI-led transformation and deliver digital-led services at scale. Tex Macro Rail, the company has received around 44 crores order from Mumbai Rail Vikas Corporation Limited, so keep an eye on this. IRDA, Keep an eye on the stock because the QIP that was launched a few days ago that has closed. The company has raised around 2005 crores. Overall the company has allotted 12.1 crore shares, and the rate at which the allotment is done is 165 rupees 14 paise. Last but not the least, keep an eye on Aditya Birla Capital because there are media reports that the company Advent would be selling stake in the company. Around 1.3% block deal is expected in the stock today, worth around 800 crores. So keep an eye on Aditya Birla Capital as well.
All right. Thank you so much, Varun, for getting us all those details. A lot of stocks to watch out for. But with this, let's move on and let's also welcome on board Deepan Mehta, Director of Elixir Equities, joining us on the show. Hi, Deepan. Good morning. Great to be speaking with you. Firstly, help us with your take on the markets because post the policy, the markets did see a great run-up but seem to be consolidating. How do you see this consolidation and which are the sectors do you believe can participate in the next rally?
Good morning and thank you for having me on your show. So I think the kind of googly which was bowled by the RBI was very well received by the market, and what was supposed to happen 3 or 4 months down the line actually has happened last week itself, and that's been something which is very positive, and we have seen the current coming through in a lot of the lenders because of that, and eventually I think it will percolate down to all the other industries which are dependent on lending to grow their business, like say real estate or automobiles or capital goods for that matter. So I think that what was a much needed boost because earnings were flagging, and now with this particular step taken by the RBI, we should definitely see improvement in corporate earnings, which will also be, I would say, benefited by lower tax rates as the tax cuts will also have already kicked in, and maybe a better monsoon as well. Because at these levels, the markets are, I would say, pretty much in fair price to slightly on the expensive zone. And for the stock market prices to move up from these levels, we need a lot of support coming through from corporate earnings. And all the various aspects and the variables are in place to lift corporate earnings. But till that doesn't happen, I wouldn't bet on the market crossing the previous highs. Till then, you may expect sideways movement. But at the same time, I think looking at the corporate earnings, a lot of, I would say, a lot of selectivity has to now come into stock selection and portfolio management. And last but not the least, we have this 9th July deadline of the 90-day pause getting over for Trump tariffs. How that will play out also will have a major bearing on the price movements over the next few months or quarters.
But Dipan, as an India strategist, I mean, what should your strategy be? Because the big overhang continues to be what's going to happen on tariffs. Yes, there is some headway now between US and China, but it's still not a done deal. You don't know which party is going to slap how much tariff on what product.
That's right. I think, for the time being, I think that's the reason why the markets also are pinned down and are moving in a very narrow range. So it's all the expectation of this particular major event, because once this uncertainty is over and done with, only then I think the real trend will play through. Because if there are going to be heightened tariffs, then you can expect all equity markets, including ours, to drift lower, maybe even crack further from these levels. But if the tariffs are reasonable and business as usual, and if you have the support of corporate earnings, then I think global markets, including ours, will start to move up. So it's like an inflection point for the entire global equity markets. Which way it will tip, we can't say, because President Trump is very unpredictable, and how it will play out is anybody's guess. All we can hope for is a positive outcome. But one thing I can tell you and stress in a very important way is that whatever the outcome of 9th July is, or whatever the way the market is going to move forward, it's going to get far more narrow and selective. Right from 2020 to September 24, it was like a all-round bull run. Everything did well. All portfolios did well. I think that there's going to be a change over there from September 24 onwards, and in this financial year and calendar year as well. I think stocks will get very selective. Sectors will get selective, and within sectors also stocks will be moving on in a selective way. So I think it's going to really test our stock picking skills in the next few months and quarters.
Thanks for that view, but let's talk about a stock that took a little bit of a beating yesterday, closed with cuts of about 1%, and that's Maruti Suzuki. Now, this is on the back of the company cutting their near-term EV production targets by 2/3, revising the April to September output to 8,200 units. My colleague Nivedna is here with more details on that and the rationale behind this cut. Nivedna.
India's auto giant Maruti Suzuki has decided to drastically cut its production target for its debut electric SUV, the e-Vitara, by nearly 70% for the April to September window. Now, instead of the earlier planned 26,500 units, the company will now produce only around 8,200 during this period. And the reason? Well, a shortage of rare earth materials, which are crucial for EV components like permanent magnets used in electric motors. Now, with China being the dominant supplier, ongoing export restrictions have created a choke point for global supply chains. In fact, ET now reached out to Maruti Suzuki for a comment, but it refused to comment on our queries. However, sources have confirmed the production cut notably. Now, Maruti Suzuki plans to pull through its full-year target of producing 67,000 EVs by March 2026, indicating a potential scale-up in the second half of the fiscal year. But the situation clearly underscores continued challenges in securing critical materials for India's EV rollout.
All right, thank you so much, Nivedna, for getting us all those details. So that's about Maruti Suzuki cutting its EV target for production in the near term, but the company sticks to its full-year guidance of close to 70,000 units in terms of production, majority of it which will be exported from India. But Deepan, help us with your take on this news flow, because yes, it's not just Maruti Suzuki which is now being vocal, or some reports are suggesting that the production could take a hit, but some of the other major OEMs have been showing concern regarding this. But along with that, Deepan, we also have that global news flow where between US and China, the trade deal respected to the rare earth is through. Do you believe for the auto majors it could be a serious issue in the near term, but someone should look at the bigger picture? Give us your sense on this whole news flow.
See, I think it's certainly going to have a temporary effect, but that's more restricted to the EVs and not so much to the ICE vehicles. So it will not have as much of an impact as what we saw post-COVID. The kind of, I think it was a semiconductor supply chain, which was kind of getting more and more difficult for the entire auto OEM global. So it's going to have some temporary effect. But the bigger picture here for Maruti per se, and for a record, we have a sizable investment from our perspective, at least in our portfolios, on Maruti Suzuki, and we're getting increasingly cautious and concerned because, for one, the company is well behind the curve when it comes to new electric vehicles. Mahindra & Mahindra clearly has the lead, as do a lot of the other Chinese companies operating in India, and they are gaining market share in a significant way. Right now, it may appear to be small, but I think Maruti lost 3 percentage point market share in the last 12 months or so. And that could turn out to be even more sharper as more and more EVs come into play. So one big concern with Maruti is this particular absence of a coherent, I would say, or very aggressive EV strategy. And second part with Maruti is the fact that the freshness of the models is gone. See, Maruti did very well for the last 2-3 years because of many new models coming in. But now the lineup is not as exciting as it was looking at 2-3 years ago or so, and there's far more competition. So I'm getting a bit cautious on Maruti. I haven't thrown in the towel as yet, but within the auto space, I think there are two companies which come to mind. Usual disclosure, we and our clients are invested. One is, of course, M&M, which should do very well. Even the tractor division should do very well because of better monsoon, and last month numbers also were good. And second, of course, is Eicher Motors. Both these companies, if you track the volume figures monthly, you will be quite impressed on the progress which they are making.
That's the point, right? I think the market is pretty much a mirror or rather reflection of what's really happening behind the scenes on these companies. You can see that with the leadership in M&M and the fact that both Maruti and Tata Motors have lagged, right?
Yeah, they've lagged, and they've lagged by a consistent margin over the last many weeks, many months. In fact, over the last 9 odd months from September highs, there has been a distinct price correction for the likes of Maruti on a relative basis, as well as Tata Motors. and a class outperformance which has come back from M&M. And that too, I think, has been a big separating factor for the entire auto pack. And I believe that this trend is here to last for some more time at least, because there are not too much of evidence that you're looking at a major revival of sorts for the likes of Maruti. I think largely the stock has been just about trading into a 2,000 pointer range, 11,000 to 12,600, 800 kind of a band for Maruti. I'm not expecting any major kind of a breakout on the stock in the immediate term. M&M, of course, the stock has been an outperformer. Even the recent past, the last, I think a month or so, the stock has managed to bounce back from the sub 3,000 levels. 27,200 mark was the low for M&M in the recent times, and the stock has managed to make a 10% to 15% comeback about those levels. So there is a very strong indications that these stocks have been class outperformers, few of them from the large cap auto pack, and I think that trend should persist.
The other big story which happened last evening was the Maharashtra government now saying that they've approved a hike, and a sizable one at that, in excise duty on Indian-made foreign liquor, or the IMFL category, as well as the country liquor and imported alcohol. Now, the government also cleared the introduction of a new category, which is going to be Maharashtra-made liquor, in a bid to expand the state's revenue base. Anurag Shah, my colleague, is here with all the decisions that were made.
Liquor prices in Mumbai and other parts of Maharashtra to go up as the Maharashtra government has given a note to new liquor policy, revamped liquor policy with the increased excise duty. So new liquor policy will generate additional revenue of 14,000 crores. So as per the new policy, excise duty on Indian-made foreign liquor is hiked from 3 times to 4.5 times of cost. For country liquor, duty is up from 180 rupees to 205 rupees per proof liter. And for Indian-made foreign liquor, duty is capped at 260 rupees per bulk liter. There is a revision in retail prices which also been notified for 180 ml liquor. So for country liquor, the price is 80 rupees. For Maharashtra made liquor, the price is 148 rupees. For Indian made foreign liquor, the price is 205 rupees. And for premium foreign liquor, the price is 360 rupees for 180 ml. So there's a new category also introduced, which will be called Maharashtra made liquor. It's a grain based spirits by local manufacturers only. So there's the new category also introduced under the new liquor policy. So focus is to generate more revenue, higher revenue, and better regulation under the new policy. And the new policy will give additional revenue of 14,000 crore.
Okay, Anurag, thanks for all of those details. We also now have Karan Tarani, Senior VP at Elara Securities, joining us on board to make sense of this new regulation that we've seen in the Alcobev space last evening. Karan, hi, morning. Thanks so much for joining us. First of all, on the back of all of these announcements, before we get stock specific, help us understand what the overall impact of this is going to be, because in your note you do mention that this could lead to a rise of 30 to 50% in MRPs. Help us understand what the impact could be, especially on the premium side of things, the luxury and the prestige segment of alcohol.
Hi, good morning. I think if you look at the impact, it's quite clear that this is the highest ever percentage price hike that Maharashtra state has announced over the last 12 to 14 years. This is a very good, this will have a very big negative impact in terms of volume offtake across various categories, right from low prestige segment to the luxury segment. Now, if you look at the generally in terms of MRP split, for any Alcobev company or any bottle in terms of the packaged product, 70 to 75% of the MRP is duty. Assuming that there is a 50% hike in duty in various categories that the government has mentioned, we will see an MRP hike of anywhere between 35 to 40% for most of these brands. Now, what this does is that you could see volume of take declining in the luxury segment. You could see some trends of down trading which could be played out because the consumers may move from BII, BIO, which is bottled in India, bottled originally, the luxury segment towards the upper prestige segment. And this kind of down trading will continue to the low prestige segment. Low prestige segment consumer may not move to country liquor, which means low prestige segment will also see a negative impact in terms of volume uptake. So the two segments which will see the biggest hit in terms of volume in our assessment, one is the low prestige segment, which is price sensitive in nature, and second is the luxury segment, wherein the growth rates are extremely high, and because the price hike is so steep in nature, you might see some trends of down trading. So it's one of the first times in the alcohol industry that one state will actually see some trends of down trading, because in the last 5 to 7 years, what we have seen clearly is a shift towards premiumization. So things are going to go in the reverse manner this time around.
And I'm guessing this would impact not just the industry, but I mean listed players like United Spirits in particular, right? Have you done any calculations on how much the earnings hit could be, perhaps?
So I think if you look at United Spirits, they are market leader in the luxury segment. They've got a very strong recall in their Scotch portfolio, the BIO portfolio. As I said, just because the luxury segment is very high in terms of price and will see a very steep price increase. Already, if you look at Maharashtra state, the luxury segment or any other category for that matter is one of the highest as compared to other states. So you will see, negative impact in terms of volume offtake. You will see downgrading trends. As per our assessment, if you look at UNSP, close to about 22-23% of their sales comes from the Maharashtra market. And if you look at the luxury segment as well, almost about 20-25% of the revenue comes from the luxury segment. So there is high salience in that luxury segment, which could see the biggest hit as far as down trading is concerned. So as per our assessment, you could see, the volumes seeing a negative impact. So let's assume that revenues from the Maharashtra state actually fall by 20% over the next 12 to 18 months. And given the kind of contribution that UNSP has in Maharashtra, as per our assessment, is about 15 to 20%. So we do see about a 3 to 4% kind of a negative impact in terms of revenues. And because Maharashtra is very high in terms of profitability, if you look at the states like Maharashtra, Karnataka, which are somewhat free in nature in terms of the way they operate, they're not government regulated in a very big manner as compared to Telangana, Tamil Nadu, other states put together. The negative impact on profitability also will be higher as compared to the revenue downgrade. So as per our assessment, you could see a 7 to 8% kind of an earning downgrade for UNSP if all these things hold true in terms of numbers. We still await the detailed document by Maharashtra government in terms of what exactly has happened and the quantum of percentage hike.
All right, so 7 to 8% of an earnings hit could be in for United Spirits. But Deepan, help us with your take on this whole news flow. It's been a steep hike in terms of the prices. The volumes are expected to take a hit. But like Karan was highlighting, two segments particularly can have an impact, be it the low prestige segment and the luxury segment. Which segment do you believe can have the most hit with respect to this news flow, and what implications can it have on the volumes?
Well, I think Karan summarized it pretty well, and basically all I can add over here is that in our assessment of the alcohol industry, it's better to be with the regional players, the likes of Radico Khaitan or Allied Blenders. Of course, Allied Blenders is not a regional player. It's India's largest alcohol company in terms of volume. But there are other smaller players as well. Piccadilly comes to mind, some distilleries. I think better to work in this industry through these regional players. They're able to manage the regulatory environment quite well, but there's of course the risk that a particular state in which they have a high sales concentration may increase the levy of taxes. But on the whole, see, eventually these things do get absorbed, and there could be a dip in volumes for the next 6 to 12 months or so, and effect could come on the company's corporate profitability as well. But these are great long-term secular growth stories, and if you buy them when the chips are down, when the cycle is down, then when the demand revives, these companies tend to have a super increase in their profitability, as we have seen in the past. So it's a sector we like to be overweight in, but I think let's just see the impact of this play out for the next couple of quarters or so.
Okay, Deepan and Karan, coming to you, we also believe that Maharashtra is planning to increase license fees for retail outlets. How much could this detriment these outlets in terms of their revenue, or how much could the increase be in terms of this move, and how much incremental impact will this news piece have on all the retailers in Maharashtra?
So as I mentioned earlier, Maharashtra is a free market, both on the wholesale and the retail side. Hike in license fee is something which works against profitability of the retail outlets. Maharashtra has a sizable contribution in terms of overall IMFL volumes. Even in terms of outlets, as per our assessment, there are more than 15,000 to 20,000 outlets in Maharashtra. It's quite a large market. And depends in terms of what is the quantum of increase in license fee. If the quantum of increase is 15-20%, I think most of these outlets will take that hit in their profitability margins. But if the hike is exorbitant in terms of 80%, 100%, or even more than that, you could also see certain withdrawal of license, which means even the supply side could see issues as far as distribution is concerned for the alcobev in Maharashtra. So I think net, it looks to be like a big negative news as far as Maharashtra state is concerned. I think this is very similar to Karnataka state as well. I think if you look at Karnataka state as well, in the last 4 to 5 months, not for IMFL, but for the beer industry, they have had 2 rounds of price hikes. So many states are kind of struggling for finances, and they are finding alcobev segment to be, to increase the taxes on alcobev segment to kind of have a saving grace.
This we let you go on that. Thank you so much for taking the time out and giving us a sense that what this news flow really means for the listed players out there. But with this, viewers, let's move on and let's get back to some of the other sectors and let's put the spotlight on the IT space. Deepan, give us some sense that which are your favorites within the IT pack, because of late we were seeing that the sector was not participating much except yesterday, wherein we see decent moves in some of those large cap IT names. No significant news flow around, but yes, globally we also see Nasdaq inching higher. So help us with your take on the IT.
See, I think there'll be trading rallies in the software services companies from time to time, but those are all exit opportunities. One or two stocks may do well, the likes of, say, a Coforge or a Persistent Systems, maybe a KPIT. Even Tata Technologies is worth keeping on the watch list. But by and large, the industry, especially the large cap IT companies, are a complete avoid. There's a secular stagnancy in their earnings because of many factors, especially the fact that their clients themselves are setting up global capability centers in India. And therefore, the kind of moat which these companies have is gradually drying up. That is one. Second, this AI threat also, I don't know how it's going to play out, but it does appear that it may not be that positive for the software services companies. And lastly, I think it's become a very mature market and very heavily dependent on sharp increases in discretionary spending. And that doesn't seem to be happening because whichever way the Trump tariffs play out, the next 2-3 years for the US economy are going to be extremely tough. And you should expect a slowdown within that large market for software services companies. Also, these companies become really huge, the large ones. And, for them to get even a high single-digit type of growth rate is becoming extremely difficult. And last but not the least, the ambition level of the industry has reduced significantly. And a lot of the managers feel that even 1.5-2% quarter-on-quarter growth, 8% year-on-year growth is a great year or a great quarter for them. And in my opinion, I think if you want to make money in the market, you have to go for companies which can deliver at least 15, 16, 17% type of top line growth. And that doesn't seem to be happening in the software services companies. So for us, all trading rallies in large cap software service companies are exit opportunities.
Thanks for that view. Before we move on and welcome Rajesh Palvia on board, there's just flashes on the bottom of your screen wherein we understand that block deal that we were anticipating to happen in Aditya Birla Capital has gone through this morning. Aditya Birla Capital has had 0.9% equity traded in 2 blocks. So that's 0.9%. These are all the details that we have right now, and we'll bring you more when we get those details. But Rajesh, hi, morning, and thanks for joining us. Give us your read-through of the market based on the action that we've seen in the last 2 trading sessions and how we've tempered off from the momentum that we were sort of gaining over the course of last week. Where do you believe markets are headed for the remainder of this week? Can we break this range of 25,100 where we seem to be stuck for some time now?
Good morning, everyone. So, yes, we do believe that, yes, market is ready to give breakout about 25,100, 200, the supply zone, which is based on the call concentration area. Looking at the broader market, the kind of buying interest is still intact at mid cap, small cap space, as well as the sector rotation is happening. So I think we do believe, yes, after a brief consolidation, there is a high possibility of a breakout about 25,150, 200 zone. And once this breakout happens, I think Nifty can extend its gain towards 25,400 to 500 in continuation of this up move. All the near-term, short-term indicators are looking at the bullish trajectory only. Bank Nifty is looking very strong. The way Bank Nifty is holding above 56,500, I think Bank Nifty can also extend its gain towards 57,000 to 57,400 in the continuation of this up move, as most of the large cap private banks are contributing to this upward momentum. So we do have a bullish view for both the indices, and we expect, yes, there is a possibility of breakout of this consolidation zone of Nifty above 25,200.
All right, so that's the take coming in on the index. Let's watch out for that. But moving on to SME IPO watch, and today we are putting the spotlight on 18 papers and foam. What are the key concerns to the IPO, and should you subscribe to it? Sharad is here with all the details. Sharad?
In focus is SME IPO, 18 papers and foam, and the merchant banker is Swastika Investmart. Now, of course, the company is procuring paper from different paper mills and reselling them to the packaging industry. It's technically a middleman in the paper procurement business. Now, there are certain concerns which we have noticed in our RHP analysis, and the first one is that the company is actually operating in a cyclical industry, which is the overall paper segment. Now, the global craft prices also that has come on a lower downtrend, almost 7 to 10% down in 2025 this year itself, and interestingly, there is a big volatility when it comes to the raw material costs. There's been a large related party transactions happening as mentioned in the RHP, and the group as well as promoter companies are actually engaged in the same line of business as well. Interestingly, a key concern is that the company has applied for a trademark for their brand, but that has been rejected as well. Largely, it's a low margin business, but overall, this is coming in the paper industry, which is cyclical in nature.
Thanks for taking us through that SME IPO of the day and your outlook on that. But on that note, in fact, Kunal, help us understand some big moves that we've seen yesterday in terms of news flow, or rather this morning. We have Vodafone Idea that's going to be in focus on the back of their 5G rollout in Bangalore. From what I understand yesterday, Vodafone Idea was one of the biggest volume buzzers that we've seen in trade. Where do you think the stock is headed on the charts? Because we've seen some recent consolidation, but after that, the stock has stayed pretty steady.
It's still pretty steady, and largely I think the stock has been trading in the band of 7 rupees to 10 rupees, or maybe 6.8 to 10. That's a much more broader range for Vodafone Idea over the last, I think 5-6 months. It doesn't come as a surprise that the stock at current levels also, I think in the recent past, just about last week or so, the stock managed to bounce back yet again from that 6.75, 6.8 levels, and then come back above closer to that 7 mark. So I believe that the stock is still largely trading into a range. I would not suggest any major trades on Vodafone Idea at current levels because of the way the stock price trends have been over the last few weeks. But it just looks like that maybe closer to that 6.5 or mark, 6.75 levels for Vodafone Idea. The risk reward would start to look a little bit more attractive than what it is when the stock generally trades closer to 9.5 to 10 rupees.
All right, so that's the take coming in on Vodafone Idea. Let's watch out for that. But let's also have a look at Dr. Reddy's, because off late for the past 3 to 4 trading sessions, the stock has been inching higher, and just yesterday it was one of the top gainers in the Nifty 50 side, over 2% of the gain coming in for this counter as well. But Rajesh, help us with the chart check on Dr. Reddy's. Do you believe that this up move can take the stock higher to 1400 levels as well, or do you believe it should halt at this point in time, because off late no significant news flow is what we track?
So we have witnessed most of the pharma stocks now showing some bit of buying interest since last couple of trading session. Dr. Reddy is one of the stock. If we look at the weekly structure, this is the 5th consecutive week where stock is showing some bit of buying interest, and the way weekly charts are now shaped up, yes, we do believe that this up move can extend further, and 1400 to 1420 would be the next target for the stock. Looking at the near-term, short-term structure, there is a sustained buying action is taking place in this counter. On the daily chart also, stock is comfortably holding above to all its near-term moving averages. So yes, one can look this stock on the buying side with stop loss of 1320. On the higher side, 1390 to 1420 would be the next target in the continuation of this up move.
That's the technical take on Dr. Reddy's. But Deepa, while we have you with us and while we are talking about the entire pharma space, I also want to get your view on healthcare in terms of hospitals, because we have been talking about financials, IT, pharma, but hospitals is a space that we haven't touched upon in a really long time. Today we have news from Narayana Hrudayalaya that their subsidiary has infused $1 million into their Cayman subsidiary for expansion on that front. If you have to put your bets in the hospital space, would you prefer a Narayana, let's say, over a Fortis, Max, Apollo? What would the pecking order there be?
No, I think we would go with Apollo. Having said that, it's a company which we and our clients are invested in. And after many years of, I would say, stagnant capacity, the next 2-3 years should see a 50% increase in bed capacity. And that could depress earnings for a year or so, but for the longer term growth of the earnings, it is very positive. Also, we should see their pharma distribution business, especially the online pharma distribution business, that should start to break even. That will give a great alpha when it comes to their bottom line. And last but not the least, I think they are the most comprehensive healthcare player, and perhaps their high valuations are justified. So maybe at corrections, if you get an opportunity to buy into Apollo Hospitals, that could be a good, I would say, investment as compared to any of the other hospital companies. It trades at a premium multiple, but is well justified. But nonetheless, I think this is one sector investors should have a decent allocation to, because it's a stable sector, it's a defensive sector, and medical expenditure, family-wise, is growing within India gradually. And a lot of these companies, be it Narayan Health or some of the other ones also, they have positioned themselves quite well in terms of expanding capacity, keeping their asset levels low, or rather following an asset-light model. And last but not the least, I think they are not expanding as aggressively as before. They are waiting for the hospitals to get profitable, the new ones, before embarking on new expansion. So it's a good industry to be invested in, but the only issue is that valuations are on the higher side. So one needs to just be a bit careful about that.
Coming in on hospitals, but Kunal, I wanted to have your take on AB Capital, because we know that you track this stock very closely, and now the block deal of almost 1% is through. Give us some sense that where do you stock headed given this block deal that is now done, and the stock is now inching higher to its October high levels, October 2024 high levels.
Yeah, I think now this should probably, let the stock, come out of that zone of a major resistance and potentially even a multi-year high about that 247 mark for AB Capital. I think it's been a fantastic, quarter for the stock price from almost 150-60 rupees, which was the low for AB Capital in the last 3 odd months, towards a point when the stock is at almost on the verge of breaking past about the lifetime high marks, about 246, 247 levels. I believe that the comeback has been very strong. It's been led by extremely strong volumes. The setup prior to that also in the last 1 or 2 years has been more of a gradual, consistent price uptrend. We looked at the quarterly charts on a line basis for AB Capital, and even on quarterly basis over the last 10 to 12 quarters, in fact more than that, the stock has been consistently making a pattern of higher highs and higher lows. So it has gone through those phases of corrections, but then whenever the stock has managed to make a comeback, it's not just made a new high for itself, it's actually managed to surpass above the previous major highs by a huge margin. So I think in all of those contexts, it still looks extremely attractive. I would be bullish on the stock from a near-term play, and from an immediate perspective, I would look at a new high being reached for AB Capital.
Kunal's bullishness on AB Capital continues this morning. But Deepan, thanks so much for joining us. We'll let you go. But Kunal and Rajesh, what about your mid-cap bets? Rajesh, we'll go with you first. In the mid-cap end of the market, what's looking attractive today?
The first stock is from the pharma space, that is Glenmark, is looking very attractive. The way stock managed to view breakout of falling channel on a weekly chart, and there is a sustained buying action taking place in this counter. We do believe that Glenmark can extend its gain. We are projecting target towards 1650 to 1660. So one can buy Glenmark Pharma with stop loss of 1597. Another stock is from the automobile space, that is Tata Motor. The way stock is now managing to cross its 20-day moving average after a brief consolidation. So we believe that Tata Motor is looking promising on the near-term chart, and a possible upside towards 755 we could see in this counter. So one can buy and accumulate Tata Motor with stop loss of 720.
Those are the two buy calls coming in from Rajesh. Believe Tata Motors is the consensus buy from both of our experts. But Kunal, what about you within the mid-cap space? Which is the stock that you are eyeing?
Yeah, so the EVs require batteries. I'll put Exide Industries as a mid-cap play. Interesting chart because the stock is now on the verge of a breakout of its 200 moving average, as well as a short-term swing breakout. So would look out for targets in the range of 418 in an immediate term for Exide Industries. Stop loss could be kept at 395.
All right, so let's put the spotlight on EVs, Tata Motors as well as Exide.